morning all, or bonjour, should I say. Ça va? Not all ça va for the French electorate, or at least not if you don't support a Rassemblement National. Yeah, not so warm, but it's sunny. That's the important thing. So the chart I've got up here, it's not one we follow, it's not one we trade. Nevertheless, it is something that is of interest to us because it affects affects what happens in Europe or in the Eurozone, and that affects the markets we trade, like the DAX, like the Euro and any of the Euro pairs. So curiously, the result caused French stocks to rally, as you can see. They're coming off their best, but the Euro as well, look at that, jumped up. And you might think, well, hang on a second, Macron, the French left race to respond to Le Pen election win. France's far right celebrates lead and seeks majority. Economist, a crushing blow for Emmanuel Macron centrist alliance. A big turnout makes clear the president's gamble backfired. So the gamble being calling the snap election. So you sort of left wondering, RN or the Le Pen's right-wing party triumphed really, but actually it wasn't as bad as expected. That's all I can say. I think you're likely to see it backing and certainly filling this gap on the euro, because we've still got this runoff to take place, and it still is. Well, what is certain is that Le Pen and her deputy Bardella will be involved in the French government somehow, and I'm not sure they refer to it as a cohabitation. It sounds particularly unworkable, but anyway, it is an important week for UK markets. We've got our own election on Thursday, and European markets. The snap French election, being a huge gamble by Macron, has clearly backfired, and there are consequences. Though the consequences are for the direction of the EU, the direction of the Eurozone. Paul says, no surprise in French result. It'll certainly shake up the EU. Yeah, I think it will, because Macron and Bardella have, they have been critical of the European project, and they've advocated, a significant change to France's relationship with the Eurozone and to the European Union. I don't think they're going to be calling an exit from the euro, but I think there'll be a lot of uncertainty now until we get this runoff vote next Sunday. Anyway, it's a horribly complicated way of running an election. Safe to say that if a candidate hasn't won 12.5% of the vote, they're ejected. If a candidate has won more than 50% of the vote, they don't go to a runoff. Otherwise, everyone puts their hat in the ring for a second runoff vote. And now, as you can see here in this headline, Macron's centrist alliance are now having to team up with a left-wing alliance to try to prevent RN getting into government. I think it's unlikely that they'll succeed, but it's just curious because Macron spent the last sort of 2.5, 3 weeks slagging off the left wing, and all of a sudden they're saying, yeah, we want to go into business with you. It's going to be difficult. Anyway, we've got another 5 days of toing and froing for you all to absorb, but I know you don't trade the French markets, but it does affect the DAX. So you can see the DAX will have jumped up on the back of the French news as well, and it affects French bonds, which affects German bunds, which affects the euro. So it's all connected. So it's something we have to be aware of. On to more important things here in the UK. The election, obviously the result is in absolutely no doubt. Even the Tories are just saying, please vote for us just to at least prevent Labour from having a landslide. I got a feeling it will be. Anyway, the scale of the Labour victory is still a little in doubt, but it could see the ruling Conservative Party wiped out in some areas, especially what was described as the red wall that became the blue wall, which will go red again, or purple maybe. Anyway, there are a few notable names that could be losing their seats as well, though not those that are not obviously who've not contesting and are exiting Parliament, but some of those that put Penny Mordaunt. There's a real challenge going on in her constituency, and there's even rumours that Rishi Sunak might lose. Anyway, markets last week pretty much sort of on hold, really. FTSE was a little bit lower, DAX was a little bit higher, the Dow Jones and the S&P and the Nasdaq all sort of unchanged, and you can see that here in the S&P. So really flatlining last week. Same thing on the Nasdaq. If I click on NAS 100, yeah, so yeah, a bit more volatility in the Nasdaq, but that's the general picture. But not all was calm. In Japan, the Nikkei, where do I get that one? There we go. Nikkei sharply higher. And the reason why the standout move in Japan, the Nikkei is surging 3.28% because of the Japanese yen, which has remained under pressure. And that is something we trade. So dollar yen, you can see here, just a straight line higher, breaking through that 160 level, a level at which we all thought the Bank of Japan might intervene and buy yen to try and protect their currency. But yeah, it's really remained under pressure, and there's this risk of intervention by the Bank of Japan, and that's making it a little more nervous at the moment, so be careful, please. The next Bank of Japan policy meeting isn't until the end of the month. Paul, I think Le Pen will be a pain in the backside to the EU, a bit like the British before Brexit. Germany will love it. Not, no. Paul, you're right. They're definite disruptors, but they've got a significant share of the vote, 33.5% in this initial vote. And I just think it's highly likely they will be pursuing one of their policies. There's this, I think it's France First, where they prioritize French voters over new immigrants. And I think it sort of leaves a bit of a nasty taste in the mouth, but you know, it's just something they've said they want to do. They're going to implement other radical policies, and a lot of it's aimed at cutting immigration and, as I said, prioritizing services aimed at French citizens. And I think they call it national preference. It's just got slightly weird overtones, but anyway, I think yeah, that's there'll be a pain in France as much as the pain in the EU, and as you said, there'll be a bit like Farage was in the European Parliament, just railing against anything to do with the profligacy of the European Parliament. Anyway, let's get back to our markets. So UK markets, well, nothing much really happening in pre-election mode, with little to shift the dial for now. And I think we all know what's going on. The markets have fully discounted a Labour victory, and the press is now awash with all sorts of rumours about possible tax rises and the consequences. And I think unless taxes are increased by Labour, Labour can only sort of really tinker with the Conservative policies. I think it's unrealistic to think that they're not going to be raising taxes. Obviously, further into their first term, the Labour Party will know to what extent taxes have increased, and also what impact the Labour Party's backers, that's the unions, have on Labour policy. But for now, their manifesto as is, things may change. We know it does. Politicians do break their pledges. Yeah, absolutely they do. US markets, we've forgotten about the US markets, although I've said that they were unchanged last week. What we have done, oh, and yes, start of the new month, start of the new quarter, start of the new half a year, which of course means that we ended the first half of the year on Friday last week, and indeed the last month and the last quarter. What's interesting is that US equities rallied, well, certainly the S&P, which is the one we're looking at the moment, 14% into record territory in the first half of the year, which is one of the best performances You remember the dot-com era with the TMT stocks, technology, media, and telecom, uh, all of that bubble, and it was a bit of a bubble, but it's incomparable to that performance back in the late 90s. So 14%. And you think, yeah, that's not bad. That's pretty good. But you try looking at all the individual stocks, because a lot of the gains were down to a small group of star performers. And you've heard me refer to them before as the Magnificent Seven. But in fact, it was the Fantastic Five within the Magnificent Seven that were responsible for 60% of all those gains. So 60% of the 14% is down to 5 stocks, and it's in the S&P 500. 5 of those 500 stocks were responsible for 60% of the gains. Well, you've got to thank Apple in alphabetical order: Apple, Amazon, Meta, Microsoft, and Nvidia for most of these gains, which really highlights something that you might have read about called the lack of breadth. That's how many stocks have gone up in the first half of the year, how many stocks have remained unchanged, and how many stocks have gone down. It's pretty shocking, actually, when you look at the numbers, because Nvidia alone, the chip stock that's got all excited because of AI and propelled it to the most, well, it was propelled, it's no longer the most valuable listed company in the world, but at one stage it got to 3.4 trillion a week and a half ago. Anyway, alone, Nvidia was responsible for 31% of all the gains by the S&P 500 in the first half of the year. That is astonishing, and it really is. And I think the risks are all too clear should the mega stock lose a portion of these gains in the second half of the year. If you strip out the gains from those 5 stocks I've just mentioned, the S&P, how much do you think that was up in the first half of the year? Answers on a postcard. Just to see if you're listening, or maybe you know, how much was the S&P up without those 5 stocks? I'll let you type away, but while you're typing, I'm going to tell you it was less than 14%. It was positive. None were. Well, actually, the S&P 500, yeah, next to nothing, pretty much 4% over the last 6 months. So it's all down to the S&P 500. All down. Sorry, it's all down to the those 5 stocks. Just extraordinary, and it's something that, you know, we all, stock investors, stock pickers, fund managers, they really worry about this, because unless you're in those 5 stocks, if you're not in Nvidia, how on earth can you make money? And it feeds itself, obviously. And a lot of people, a lot of fund managers, they're rational people, but they just have to be in it. They know the risk. They know that a stock that is worth so much, it trades like a smaller stock. It has moves of 10%, 5% in a day, in an afternoon. Yeah, Stuart, big bubble. It is a bubble. And we would not wish it to be this way, but the S&P 500 is market cap determined by the market capitalization, and the market capitalization of one stock can take it all up. Wasn't it the other day it lost 14% of its value, which was 500 billion in the space of 4 days? It's just on another level compared to what we know here in the UK. Anyway, there we go. Quick look at currencies. We've already discussed the euro responding to the not quite as bad as expected French election results, although I still think it is going to be quite difficult for France in the coming months as RN joins in government with Macron. The US dollar, bit of a sort of an unchanged week last week. The euro and sterling sort of remaining unchanged. The only one that was moving, we've already discussed, it was the yen that continues to fall. This is a number of yen to the dollar, so a higher price here is the yen falling against the dollar, just to be very clear. As always used to be sort of around 105, as far as I can remember, a couple 2 or 3 years ago, but 161, all down to the ultra loose monetary policy. Yeah, they're unlikely to raise rates, but UADA, their governor, said that they could consider raising rates, but I don't think the market believes them. Hence the reason why the yen's fallen out of bed. What else is going on there? The Fed minutes for the last FOMC meeting, so that might provide a bit of direction for the dollar this week, but that's released Wednesday. I'll get onto that in a second. But also, we had a more hawkish member of the FOMC. Sorry, just to explain, for those that you are new, and I know there are a few people who are new to Trend Signal or in these workshops, the FOMC is the rate setting committee. So they decide monetary policy in the United States. That's the rate setting committee from the Federal Reserve, which is the US central bank. They meet once a month, roughly, but they don't meet every month, but they have 8 meetings a year. And then they publish their minutes about 2.5, 3 weeks, or 3 weeks after the event. And so the Fed are releasing these minutes their meeting held on the 12th of June. And that'll give us some insight into sort of Fed thinking about interest rates. But last week, one of their members said that, who's a bit of a hawk, a lady, I can't remember her name now, but she said that she remained willing to raise borrowing costs again if inflation remains at its current level. Yeah, raise, not reduce. So, we've all been thinking, I mean, obviously, if inflation doesn't come down, inflation goes the other way, then it is possible. But it's just interesting to sort of read it actually in print. Yeah. There we go. So that's a hawkish member of the FOMC calling for a rate rise if inflation doesn't come down. Commodities, gold, well, nothing much, really unchanged, hemmed in by the uncertainty really about the direction of both the euro and the US dollar, but the Chinese are waiting in the wings to buy more gold, I've been told. Crude oil, just I think little movement last week. In fact, crude was up around $0.50. So it really is consolidating the gains from since the first week of June. Yeah, it's quite a turnaround for crude actually, and I think it's looking like there is going to be a more challenging supply-demand environment as we enter September and the run up to the winter, and that's what's reflected in the movement, I believe. Okay, let's have a look at the calendar this week. Busy week, very busy week for markets. Well, we've already had a discussion about the French and the UK elections. They'll be dominating the markets here and in France. And we've also got non-farm employment change and also Eurozone inflation data. So quite a lot to absorb, really. So we'll chug through it. It's odd. China releases economic data on a Sunday. They don't have their markets open then. Anyway, they've released their data on the manufacturing services sector. The PMI stands for Purchasing Managers Index. So those are the people who report from companies to the state to tell them how they're doing or not doing. As you can see, the manufacturing sector remains just below 50, which marks the separation between a contraction and expansion. But service sector data, or non-manufacturing, it means service sector, just sort of continues with the trend of weakening really over the past 3 months. So China was sort of picking up, and it's just not clear that it's continuing to do so. Anyway, let's move on to, I won't talk about individual state CPI data because we've got the general one out on Tuesday, but we've got this ISM. That's the one we like to focus on, Institute of Supply Management. This is a survey in the states of the manufacturing sector. They also do the service sector later on in the week, which I'll get onto in a second. But you'll note that manufacturing picking up a little bit, yeah, just below the 50 level, not quite expanding yet, but the dollar will be sensitive to that. That's a reasonably important number. Manufacturing has really struggled since the pandemic, since the cost of living crisis, especially hit badly by the jump in energy prices. and it's not really recovered significantly since those days. Lagarde, yeah, she's the chairwoman of the European Central Bank, speaking at this ECB forum on central banking. Sintra, as you can see on the screen, I think that's in Portugal, I seem to remember. Anyway, it's a 3-day conference that these central bankers will be jaw-jawing. We'll have a lot of jaw-jawing. I'm not sure it'll have much impact on the markets, but it's possible, and it's certainly nothing we can plan for. So I'll leave it at that. Tuesday, there it is, the core flash estimate, the first reading of inflation for last month. A bit of a pullback to 2.8%, which the market is looking for. The euro and eurozone assets will be sensitive to that. What I mean by eurozone assets, I'm talking about German equities, I'm talking about French equities and bonds, etc. We trade the DAX, the GER 40. That's the one it'll impact there. Yeah, more interaction from central bankers at this forum on central banking in Portugal. Then we go to ADP employment change. This is a private payroll company in the United States. It's called ADP, and it releases its own non-farm employment change data, similar to last month, really. 156,000 new jobs created in June. ISM services data. We've just looked at the manufacturing. This is the other part of it. So an economy is made up of manufacturing or service sector jobs. This is service sector, and we're looking at a bit of a pullback from 53.8 to 52.5. But whilst it has fallen, it still remains above 50, as it has done, in fact, for all but 2 of the last, I think, 48 months. When I looked earlier on, you can click on this graph here, and it gives you a bit of a graph. Yeah, you can see. So the service sector, it's sort of waning a little bit, but it's only been in negative territory twice since the pandemic. What a performance. Well, let's face it, the US economy has outperformed any other Western economy by a country mile. And so that has to be reflected in, the manufacturing and services sector growing. Yeah. And the services sector is a lot bigger than the manufacturing sector. Right, where were we? Okay, Thursday, well, we know all about that. Parliamentary elections. We call it a general election. The outcome is definitely not in doubt, but the scale of it, probably a bit more uncertain. I think many commentators expect Labour to win with a landslide. Most news and media outlets are backing Labour. I note that the FT joined in. Britain needs a fresh start. I did have it in The Economist on there, but I was then looking at Macron. But The Economist have thrown their weight behind Labour as well. And I think it's sort of people are just tired with the Tories. I wonder whether that'll be the same view in 5 years' time. Anyway. So there we go, general election, little bit. I think there's little impact expected on the result because we know what the result's going to be. And if it's a very, very heavy landslide, I don't know, it might be a bit negative for the pound, I'm not sure. We then have construction PMI. So this is a measure of the individual construction sector in the UK. The reason why I mention it, it's really struggled for most of 2023. The construction sector is now picking up, and the Tories are leaving. They're leaving government, and the economy has been improving. Construction's picking up. Unemployment is sort of holding steady, but they're having to wave goodbye and let Labour have a crack at it. Anyway, yeah, construction sector here expected at 54, down a little bit from 54.7. But in the context of the election happening on Thursday, I think this release will actually have no impact whatsoever. And then we jump to the most important release of the week on Friday. Why is employment so important to the market? In the United States, the Federal Reserve, that's the US Central Bank, has got 2 mandates. Unlike us, Bank of England, unlike the Bank of France, unlike the European Central Bank, unlike all the other banks, who just have one mandate, which is to maintain price stability, i.e. control prices or inflation through the use of interest rates. But the Federal Reserve has to foster full employment. So the release of this employment data will directly impact Fed policy, and Fed policy impacts equities, currencies, all of the stuff we trade. So to say it's important is an understatement. So we're looking for 189,000 new jobs, lower than the previous month. So that's 189,000 new jobs in June. Unemployment rate expected to be unchanged, so 4%, and average hourly earnings dipping a little bit, which the Fed will be pleased to see. That'll mean that it's less inflationary. Anyway, US dollar will be sensitive, US assets, and also global assets. So if something happens big in the States on the back of this number, we will react here in the UK. We will react in the EU. Can Biden be replaced is a question. Michael, I think he can, but the Economist is saying he can't. The FT is saying the pressure is building. And it seems a bit late in the day to replacing Biden with someone, Kamala Harris? It just seems like it might look desperate. I don't know. I don't think Biden wants to be replaced, but apparently it's Jill Biden, Joe Biden's wife, that holds the whole fate of the Joe Biden, the Democrats, and the election in November in her hands. It's up to her to decide, apparently. Yeah, good question though. Yeah, isn't it amazing? You've got one very, very old guy wanting to have a second term as president, and you've got another old guy. If Trump gets in, Trump will be the oldest president to serve as president. Amazing, amazing. He just happens to be younger than Joe Biden, who looks and sounds really old. Yeah, but yeah, good question, Michael. Thank you. Okay, that's it. Thank you very much. 20 past 9. I think we've done our bits. Any questions about what's going on in the markets? Clever, not so clever? Observation, anything? I'm very happy to respond. I sometimes think I do witter on and don't even pause for breath, and you don't have a chance to comment. maybe you're thinking it's just so comprehensive you don't need to. Anyway, if you're all is Rajiv, I think it is. Is Hong Kong closed today? I seem to remember there was a holiday in Hong Kong. Oh, that's not going to help. Holidays. Holiday dates. That's what I wanted. Yeah, 1st of July. Yep. Rajiv, absolutely. Yeah. Hong Kong Special Administrative Region Establishment Day, 1st of July. Yeah, thank you, Paul. You're very complimentary. Never wittering. Yeah, you have a great week, everyone. Rajiv, I hope that helps. We will all pick it up again next Monday at the usual time, and have a good rest of the week. All the best. Bye for now.